All right, we're live. Just give me a second here.
I need to get a haircut, brother. Gonna do it this week.
All right, yeah. All right, let's get this started. So, welcome back to the weekly where we cover the biggest stories of the week in the Bitcoin and cryptoverse. I'm Graham Stone, joined by David Sencil as usual. How you doing, David?
Doing well. Monday morning, and it's a nice one. How
Yeah.
about you?
Yeah, doing great. Had a nice relaxing weekend. Slept very well according to my health monitoring device.
According to your Chinese health monitoring device.
Yes, exactly. All right. So this week, I think there was a clear message delivered around the world. Governments and central banks are no longer just talking about crypto regulation, they are tightening the screws at a rapid pace. We have some G20 coordination. We've got national tax grabs around the world, fresh warnings. I think the trend is unmistakable. More control, less surveillance, and less room for the Wild West era of crypto. Let's get into it. Starting off with the G20 meeting. So there was a big G20 meeting held a week or so ago in Johannesburg, South Africa. The summit produced a leaders' declaration paper or declaration that explicitly endorses unified oversight of stablecoins and DeFi. It backs the FSB/IMF roadmap. The FSB, by the way, is the Financial Stability Board. It's an international body that monitors and makes recommendations about the global financial system. So this declaration backs the FSB roadmap and FATF standards, pushing every member nation towards the same rules on disclosures, risk management, and anti money laundering for virtual assets. By the way, one more acronym decryption. FATF is the Financial Action Task Force. So, this is an international or an intergovernmental body that sets global standards to combat money laundering, terrorist financing, and the financing of weapons of mass destruction. All right, so the G20 just doubling down on, hey, the entire world, you must follow our rules about the way to report crypto transactions.
Yeah, this to me seems clearly U.S. led, with the U.S. changing its stance on crypto and to a much more favorable position. The G20 then kind of has to follow, right? So this just seems to be um, almost like an echo of what has already transpired in the U.S. And that's how I would interpret
Perhaps.
this.
Although, ironically, I think the U.S. boycotted this G20 meeting,
Yeah, because
which is,
because the U.S. doesn't like to be told what to do by a bunch of
yeah.
foreigners, and so, but still, this to me seems like that. And I wrote a little bit about this, and it's like, oh, good. I'm glad that you are now recognizing stablecoins and DeFi, but I mean, seems a little late. Classic, classic international organization kind of late to the party thing.
All right. Well, I want to continue with my roundup of moves in the global crypto regulation sphere. So in South Africa, echoing the G20 vibes, the South African Reserve Bank has officially tagged cryptocurrencies and stablecoins as, quote, structural risks to monetary policy and financial inclusion. So, in a new report, the South African Reserve Bank warns of potential capital flight and inflation pass through from unbacked digital assets, and they are urging stricter licensing for providers. You can expect licensing hurdles and capital controls to follow in South Africa, I think.
How funny is this, though? Come on. Let me repeat what you just said, okay? Structural risks to monetary policy, fair enough. And financial inclusion? Oh, come on. There's no way that's it's the opposite. It is
It's the
absolutely
opposite.
the opposite,
Absolutely.
right? Stable coins, coins that allow you to have stability even if you're in a country,
How
corrupt,
could those be
poorly
against
run country.
financial inclusion?
Yeah, yeah, you're in a corrupt country that has no stability. The currency holds no value. Stable coins are the thing that's going to it prevents financial inclusion. Get out of here, man. What is that? Double speak.
Yeah, exactly. Moving on, the ECB, the European Central Bank, warned that rapid stablecoin growth could create serious contagion risks to the Eurozone banking system if issuers face redemption runs. This is the clearest signal yet, I think, that Europe is preparing heavier handed rules in 2026.
Okay. I mean, again, following what we just heard, I mean, talk about just like complete and utter hypocrisy, throwing stones from glass houses. So a bank, a central bank, and other institutions have been claiming this for some time. But here's another example that stablecoin issuers face redemption run risk. Banks, fractional reserve banks, are saying this.
Yeah.
Like
Yeah.
the whole thing in stablecoin issuers have to have one to one backed assets.
Yeah. And
Fractional reserve
actually,
banks don't.
yeah, it's absurd.
Insane.
By the way, not sure if you saw this story. It's not in our list today, David, but S&P, I believe, gave Tether the worst possible rating uh, for its like stability or its. I, I wish I had the story here, but basically, there S&P is like calling out Tether, saying that it's of all the stable coins, it's like the least uh, compliant or something. But if you look at uh, Tether's backing of its 100 and some $1 billion of tethers that are out there, they have more collateral backing than the value of the tethers. So it's the opposite of um, what's the word you just used there? Fractional reserve, right? It's the opposite of that.
Yeah.
They have it's over
Yeah.
collateralized,
Yeah. Yeah.
and yet they're getting called out by some financial body to say that it's risky.
Yeah. 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 I mean, it's just these kinds of things are not to go off too much in a tangent, but these kinds of things would kind of make me scratch my head if COVID didn't happen like 5 years ago, and you just see this discontinuity with reality. I guess it's just everywhere. It's so insane that people or organizations can just say things that are just flatly wrong, uh, and like opposite of what reality is. Wow. Okay.
All right. So continuing on our gaslighting tour, we've got Beijing. So Beijing doubled down on its crypto crackdown. It has issued fresh warnings against, quote, speculative trading and is reinforcing its ban on exchanges, ICOs, and mining as risks to social stability escalate. So China's top financial and law enforcement agencies convened in Beijing last week to reaffirm and strengthen the nation's prohibitive stance on cryptocurrencies. And they're warning that speculative activity has resurfaced and poses new risks to financial stability. So, yeah, there's
Honestly,
the people's. Yeah, go ahead.
well, I would just say of all of these stories thus far, this is uh, thus far in this is the most honest. It's still dishonest to some degree, but this is kind of true to some extent. But yeah. Sorry, I was just gonna put that in there. That
Well,
it's
at least
kind of
they're
fun.
they're they're saying what they actually think.
Yeah, and but I mean, coming from China, this is the funniest thing is here you have ostensibly the least what democratic country here, and they're the one who's speaking closer to the truth than the others. What a sad, sad situation.
Yeah, so they put out a media release after the meeting, and according to that, despite achieving significant results in previous crackdowns following the 2021 joint notice, quote, virtual currency speculation has resurfaced and it is leading to related illegal and criminal activities that pose new challenges for risk prevention. By the way, as we know, China banned Bitcoin mining in 2021. The hash rate coming out of Bitcoin at the time fell off a cliff, never really went to zero. But according to a new report out of um, what's it called? Hash rate index. They have published a new report, and it says that the hash rate coming out of China is now number three globally by the end of October, as calculated at the end of October. And roughly 14% of global Bitcoin hash rate is coming out of China. So perhaps this is part of the reason that for this new statement out of the PBOC and financial authorities in China.
Yeah, um, I think there are multiple parts to this. Like, I don't know if you recall the kind of the they did like the TikTok social media ban on kind of like these slop videos. Do you remember that? So they
Yeah.
removed those. They're saying this is bad for people and no video games after a certain amount of time. This kind of thing. Um,
Yeah.
so it does kind of make sense from that angle, like speculative, like playing the speculative market, lottery gambling kind of stuff that you see kind of endemic in the West and Korea. Um, so that there's that angle, but then there's also the angle that I think you're implying, which is Bitcoin and other crypto assets are probably the best way for people in China to get out, to get their money out of China's walled off economy. So from that angle, they also probably are worried about the rise of assets being used and mining, Bitcoin mining increasing because it's a very easy way to get your money out.
Yeah, I mean, so actually, yeah, they just like all the other countries issuing these statements. I think what they're saying and is different from what they actually are thinking. Right? They're saying, "Oh, it's to prevent speculation. We want to protect retail investors. We don't want people doing bad things that can hurt themselves." That's what they're saying. But in reality, what they are actually doing is just ensuring capital controls. They don't want money moving out of their system. And I mean, that's the plan, right?
Yeah, I mean, if I were to qualify all of these stories, we have a couple more to go. The one word I would use is cope. These countries, um, they're it's all massive cope. They are worried about um, the threat of Bitcoin and crypto, and so they're saying all various things um, to prevent kind of deeper problems within their own country, right? Like no one's forcing people to go use Bitcoin and crypto, right? Stable coins in particular. They want to, right? And these countries are going to have to wrestle with that. They're going to have to wrestle with this notion of that they don't want to use something else. They want to use a stable coin. They want to put their money in stable coins, or they want to put it in Bitcoin. And then all yeah, like you said, all the messaging is just kind of to hide the fact that there's this kind of problem. I would say
Yes. Common thread is all these countries are trying to crack down on the freedoms that crypto provides to their citizens. And
cope.
the language of the statements is all about how inclusion and protection, but in the reality it's about control. So let's move on to the next one, which is South Korea. South Korea's Financial Services Commission just widened Korea's already strict travel rule to cover more transactions and lower thresholds. So the move aims to address rising money laundering concerns. Under the new rules, exchanges now have to collect and share full originator and beneficiary info on almost every transfer above $750 in value, with massive fines for non-compliance. Obviously, privacy and small DeFi users are collateral damage here.
So, I have a question for you, Graham. I mean, we were in Korea a couple months ago, and it was interesting to be there and to talk to um, South Koreans about, because I didn't really know about the kind of the situation there, and why Koreans are such a huge part of the population, um, trade specifically on speculative crypto assets, and how it's like very, very deeply tied into Korean politics, which is, I think probably Korea is the country the most in the world, especially first world countries, where crypto is like a top line issue, you know, for determining like political viability. So I wonder when you see rules like this, how this is going to play for Korean people. Like, are they going to really hate this? Is this going to have effects? Is this the way the Korean government is going to try to push to implementing a tax on capital gains in Korea? Remember that we talked about how like every time that they've tried to implement capital gains tax on crypto assets, it's cost like political careers. So this to me seems like, are they kind of trying to inching forward to that direction? I don't
I
know.
feel like it. This is sort of a necessary infrastructure that needs to be put in place before they ultimately pull the rug and institute capital gains tax on crypto trading in Korea.
Yeah, that's what
Because
it sounds like.
if you yeah, if you put the tax on now, then the people can move to DeFi wallets and avoid it to some extent. Um, but if you start collecting, like basically outlaw uh, anonymous DeFi transactions, first of all, then it makes it easier to force compliance later when they do implement capital gains taxes on crypto in Korea.
Yeah,
If it ever becomes politically feasible to do so.
yeah. It's kind of like maybe they're doing the what's it called? Frog in the boiling pot, right? Like you just slowly increase the heat until you boil the
Yeah,
frog.
that makes sense. Moving on, Brazil. So a new bill is under heated debate in Brazil. The bill would slap a 15 to 20% tax on stablecoin transfers in and out of the country. Lawmakers are framing it as a revenue generation method and anti-speculation. I'm not sure how that works, but anyway, the crypto community calls it a death blow to adoption in one of Latin America's biggest markets. The bill has not passed yet. It is going to be voted on in December.
Yeah. So we were talking about this, and um, Brazil currently taxes remittances. Um, the rate is different for inbound versus outbound remittances, and there's different like categories. But when I was talking with my good friend Mr. GPT, um, I was told that like outbound remittances go from like 1.1% to 3.5%. Right, that's the tax, and depending on different things, it'll be 1.1 all the way to 3.5. Inbound go from 0.38% to 3.5%, roughly speaking. So this proposal is way higher than what's done for fiat remittances.
Yeah. I don't understand how there can or should be any tax on remittances I mean, you already pay tax on income. You already pay tax when you buy things. So now you also have to pay tax when you want to send money. I mean, on top of all the fees of the like remittance providers, that just seems like
But I mean, even that aside, like I could get behind some tax. First of all, I think it should never be a percentage. Like let's say I mean, I don't know. There has to be a lot of loopholes to this, right? Like if you're Coca Cola and you need to send money from an international from some international holding company you have to Brazil to pay for bankroll or something like that, or to pay for a
yeah.
new plant. There's
Surely you
no
don't have to
way.
pay tax on that.
There's no way in hell that they're going to have to pay like a percentage of like $1 billion.
There's no
They
way. I mean, that's not a remittance. It's a something else like
like what, like a transfer? I don't know exactly what's the definition of a
transfer,
remittance.
business expenses transfer. I don't know,
Well, they
but
say in this GPT thing, they say like salary, services, investments, and loans, that is actually taxed even higher um, than what we're talking about. At least Brazil does. So I don't know. But I imagine in practice, if you're like a large company like that, there's no way that they're going to be paying a percentage. Anyway, fine, you have to pay a tax, but like
why should
0.38%.
it be 10 times the amount if you're
Yeah,
using
yeah.
just a different technology to
Yeah,
transfer the money?
but like fifteen
Seems like
percent
there,
is
yeah,
insane. Fifteen
yeah. It
percent
seems
is
like
insane.
this is a bill sponsored by the remittance industrial complex. I don't
Yeah, and
know.
or
Like,
the banks probably hate
yeah,
this, right?
yeah,
The local Brazilian
exactly.
banks.
Yeah, exactly. All right. So one ray of hope, perhaps, in this roundup is Bolivia, where in an historic U-turn, the country announced it will integrate regulated stablecoins into the formal banking system and recognize certain ones as legal tender alongside the Boliviano. One small win for adoption, but I think it might be the exception here
I
that
like
proves
uh,
the rule.
I like your accent there. Can you say that again?
A Boliviano.
Boliviano.
That sounded, it's too Italian.
It did sound Italian. Yeah.
All right.
Yeah. So
Yeah.
here's the thing: is um, this is an example of a country who is kind of like not burying their head in the sand, not fighting the current. Um, all the other countries are basically they're being they're refusing to deal with reality, and they're just gonna get smashed, right? I think, and so you want to see countries like this who are recognizing what's happening.
Okay. Speaking of countries, well, in this case, a state that is recognizing what's happening, Texas has formally entered the Bitcoin arena as of a week or so ago when officials deployed $10 million of surplus budget funds to acquire Bitcoin exposure. So, this is the first actual purchase of Bitcoin for the Texas Bitcoin Strategic Reserve. You may remember that they made this possible with a Senate Bill 21, which was signed in June of this year. And here we have the actual first purchase. Now, $10 million, it's tiny. It represents 0.0004% of Texas's biennial budget. So they do a budget every 2 years in Texas. But it does mark a symbolic break from traditional asset management. Lawmakers framed the initiative as a strategic response to inflation and federal debt concerns, which mirror national conversations surrounding digital asset reserves. So, Texas leading the way in the Bitcoin strategic reserve space, getting that first amount of Bitcoin on the reserve.
Yeah, I mean, I honestly think I am surprised that this happened so soon. To be honest, like the act of going out and buying Bitcoin on the market is it's a huge first step. I think it's so much bigger than like what the federal government did in was it March of this year with the announcing of the strategic Bitcoin reserve, where they just basically reclassified the seized assets that they already have. And so this to me seems like a much bigger deal, where you have the government saying that they're kind of putting their money where their mouth is. And so it might be a tiny amount, but it's I think it is kind of a big deal.
Yeah, I think so too. By the way, they purchased IBIT, but there is a note here that they're planning to eventually self custody once they get it all figured out.
Nice, very very cool.
All right,
Okay,
moving on.
well, yeah, let's move on to speaking of ETFs, IBIT being the biggest one. Boom, transition.
Nice transition.
Thank you, thank you. So new altcoin ETFs are continuing to debut. Um, Bitcoin, obviously, we started with, then Ethereum, we had Solana. Most recently, we've had a bunch of XRP ETFs in the past couple of weeks. This came after the government shutdown, where you had this kind of buildup of a bunch of filings. And the SEC released guidance a couple of weeks ago saying, yeah, we've kind of this kind of we have this massive backlog, and we're gonna kind of accelerate how we go through these and release them. And this is, I think, they're really kind of delivering, right? So you had XRP ETFs come out, a bunch of them. Um, Last week you had a Doge ETF released. Bitwise launched the Bitwise Dogecoin ETF, ticker BWOW.
It's great. You read it and you want to go. You just want to say "bow wow."
I mean,
Snoop
but
Dogg
Graham,
is going. Go ahead.
I mean, I just imagine saying, like, if I said this to you, if I said that sentence to you 3 years ago, like, what? I mean, you just look at me like I'm a mental patient, right?
The BWOW,
I'll be like,
the BWOW
like
ETF.
Graham, in 3 years, Bitwise is gonna release on was it on NYSE an ETF for Dogecoin, and they're gonna call it BWOW. You're just like, what are you talking about, psycho? It's just
Yeah.
anyway. Anyway, so CEO Hunter Horsley, he basically pitched BWOW um, as access to both a cultural coin and a long-lived crypto asset, Doge. Um, Bitwise says that Doge holders and fans of Doge want the convenience and protections of an ETP format, which BWOW provides. Uh, Even though it like differs from directly holding Doge in your wallet, obviously. I don't know if I agree with that. I mean, it'll be interesting to see. I doubt anybody in crypto is going to buy this, right? Like seriously.
Well,
Um,
David, just going back to your question, what would I think if in 2022 you told me that this was going to happen 3 or 4 years later? Um, I'd be like, wow, that's crazy. And when that happens, surely Doge will pump on that news. But as you can see here, I've got the Doge chart up here. It's down 26% on the month. No discernible pump from this ETF announcement.
well, I mean, that's the other
So,
story, Graham, right? Like the B Sol, right? The Bitwise Solana ETF.
hmm,
Like, I think it was 17, 18 consecutive days of inflows.
hmm.
That's
And yet
changed.
we look at the
That's
SOL
changed.
price.
I mean, the SOL price did nothing except go down. So, you know, anyway, so one of the interesting things is about this BWOW thing is that the ETF is not registered under the Investment Company Act of 1940, and uh, they had to say that this carries elevated risk, but it takes a step towards mainstream adoption of crypto assets. I personally really, I mean, I personally think that who's going to buy this, right? I don't think institutions want to touch meme coins, and I don't think meme coin holders or lovers want to buy like an ETF product of the meme coin. You know what it reminds me of, dude? Is it reminds me of like um, the commodification of the 1960s and 70s hippie culture, right? Like you see the re-release of the Volkswagen Beetle in the 90s, right?
Yeah.
It's just kind of cringe. Like a meme
Yeah.
coin
Well,
ETF, it just seems like okay,
yeah.
boomer.
I think a lot of this is it's yeah, that there's that, and also it's just being driven by incentives. So the IBIT ETF is BlackRock's most profitable product of the year.
Yeah.
So of course they're going to launch every possible ETF that they can get away with, and just in hopes that they'll be generating some revenue from it. Yeah, but I don't think it's going to get much volume either. Who knows? Maybe there's some untapped. Yeah, like maybe once the boomers see this thing on their Charles Schwab accounts or whatever, they're gonna remember their their kids, their millennial kids who have been telling them about Doge for 10 years, and they'd be like, "Oh, be wow! Let me call up, let me
Oh.
call up that young man at my brokerage account." Get
Isn't
him to.
this is what the Zoom dogs like? Be wow. Yeah. So anyway, it'll be interesting to see. Like honestly, you Bitcoin, Ethereum, Solana, even XRP. I get the appeal from people who buy ETFs. That makes sense to me, right? It gives them exposure. They don't have to fuss with all the crypto crap. But Doge, I don't know. Anyway, we'll see. I'm excited to see how it performs. I don't think it'll perform well now, but the interesting thing will be let's say next year we get like an alt season or we get like some kind of renewed meme coin season. That would be the time where you would look to I would look to this as the real like use case because that then you could see um, meme coins that have an ETF associated with it, they could really outperform, right? Like if you get an altcoin season, because it would allow all these other tradfi people to kind of play into that meme coin mania, and really dump on the idiotic crypto, the not financially sophisticated crypto people, right? So,
Yeah.
I,
So yeah, potentially setting up for max extraction if there's another meme
exactly,
coin run.
exactly. All right, well, so what something that's way more interesting to me than Doge, at least right now, is BNB looks like to be the next new ETF coming out. So Van Eck is moving its proposed BNB ETF closer to launch. It's filed a Form S1 with the SEC, and it wants to list on Nasdaq under the ticker VBNB. Not very creative, but what are you going to do? The ETF is designed to track the price of BNB using a market vector BNB index. The shares are backed by BNB held in a trust. Authorized participants will be able to create and redeem shares using cash or in-kind BNB, which is pretty cool, right? So you can use the BNB you have and convert it to the shares, or you can use cash. So I wouldn't be surprised to see like Binance maybe diversify into this. For example, I'm sure they hold a lot of BNB. Again, like the Doge ETF we just talked about, this does not registered under Investment Company Act of 1940. This doesn't use any derivatives or leverage, um, and it doesn't have any staking currently. But apparently, the sponsors may decide to stake some or all of their holdings in the future via third parties. So they have the ability to stake the BNB, but they're not doing it yet. I don't know if anyone has noticed this, but as we've talked about many of these ETFs, last week I think we mentioned the XRP ETFs. Basically, none of the new ETFs that are coming out are using the Investment Company Act of 1940. Older ETFs were using this Investment Company Act of 1940, but a lot of the newer ones are not. And the reason is that most single asset crypto ETFs, so your Bitcoin ETFs, ETH, BNB, Doge, XRP, Solana, are structured as commodities, not funds. And so they don't want to live under this Investment Company Act of 1940, and they rely on a different thing, the Securities Act of 1933. Apparently, the 1940 Act has more like case law. It's there's a lot more like SEC guidance on it, and the 1933 Act has less of this, so it's classified as a bit riskier. But it seems to fit more with the idea that these digital assets are more commodity like, and so that's why people who are listening to this keep hearing us say this is not under the 1940s Investment Act like that. So if you're interested in that, all right, let's move on to, so ETFs are doing really great. You see them booming. However, the other TradFi product that gives exposure to crypto, DATs, kind of one of the biggest narratives of this year, they are not doing very well right now. And so we have this story talking about, are DATs over? So DATs, they basically are a company that holds crypto on their balance sheet. And it has grown into a large sector. It's about $100 billion plus of the crypto market. Major players, of course, you have like Strategy, the Bitcoin, I would say passive style investment DAT. You have Bitmine. This is supposed to be more of like an active ETH strategy holding company. And Bitmine holds like 3% of the entirety of ETH's market cap, by the way. And you've seen DATs pop up, of course, during this year for Solana, BNB, Sui, Doge, Hyperliquid, all over the place. Early in the year, it was a huge narrative.
Tailwind.
Yeah, tailwind, but I would also say it kind of drove the market, where ETFs really powered 2024, at least in the first half of 2025. I would say the marginal buyer, or the buyer that had the biggest influence on the market, were these DATs. That's no longer the case. All these DATs MNAVs have collapsed. According to Dragonfly's Rob Haddock, wait, hold on. Interest has completely dried up for DATs as of now. And DATs are now reportedly selling their crypto assets to de-risk and fund share buybacks. This is creating steady sell pressure. Maybe if you look at the chart, you can see this kind of steady selling, and this might be one of the reasons. Research from Delphi Digital backs this up, noting that institutional demand for DATs is down 90% from its August peak. Bitwise's Matt Hogan argues that DATs face structural challenges. The reasons they trade at a discount are clear, while potential reasons for a premium are uncertain. Looking ahead, Mr. Hogan expects larger DATs to fare better than smaller ones because they can issue debt more easily, lend more crypto, and tap more liquid options markets, implying that you're going to see a consolidation to this sector. I would also add that Bips and Bits last week or this week had a wonderful section on DATs, and I encourage everyone to listen to that section. I also talked about it in my newsletter. The TLDR is all of the people on the show were bearish on DATs short term. However, once a lot of these DATs kind of blow up, and you see kind of this consolidation, they might start looking more interesting. But right now, DATs DATs seem to be done, at least for the short term.
Yeah. So the reasons they trade at a discount to their MNAV, the assets that they're holding, is mainly just because of all the administrative fees, right? So they have to like pay salaries, and there in many cases there are like a pretty egregious profit sharing contracts in place, where basically it's um, tails I win, heads you lose situation, for whoever like set up these DATs, and so that's why the stock prices of them are below what they're actually holding, right? And then yeah, on the upside, it's unclear why they would trade at a premium to their NAV. So I mean, this is what we've been saying all along. It was always kind of a mystery why they were trading higher than the assets that they were holding, to me at least.
Yeah,
So surprise, surprise, they are now below that, and some of them are apparently spitting out their coins, which is putting downward pressure on the markets. I don't think MicroStrategy is or will be spitting out their coins. And then also, I don't know if you have anything to comment on there, but they're not all dead, right? So the
no.
next and last story here
Oh
is
yeah, well, I
from
have one comment.
Metaplanet. Yeah, go ahead.
So just another reason why the MNAV situation, or the value of a DAT, actually just in general, that the bits and bits guys were saying that I didn't know, is the way that these a lot of these DATs are structured. Uh, it's actually really hard for activist investors to come in and buy the company and liquidate the
Yeah,
assets, which I didn't
yeah,
know. So like, even though this is what I thought. I was like, okay, so let's say you have like a mid-tier DAT, and it's way below MNAV. People like other bigger DATs, or even tradfi companies that come in and like, eat this stuff up and sell it for parts. They must be licking their lips, right? Well, no, apparently the MNAV has to get down low enough, even lower than where it is, where they can come in and actually dismantle it, because a lot of the how these things are structured, it's really hard to do that, which actually means that um, you can't really say that the assets they hold are worth what they actually are, because you can't really get to them and sell it for pieces, right? So that's another negative that I didn't know, but it's a pretty big negative, because um, that's what I think should happen, is you should have like bigger DATs who are better run and have more liquidity come in and scoop up these smaller DATs and just throw away the company and take the digital assets. But they can't really do that. At least they can't do it cheaply. So yeah,
yeah,
you have to account for that.
yeah. So maybe just to note here, this but not all DATs are dead. Metaplanet, the Tokyo listed company known for its Bitcoin focused treasury strategy, still doing pretty well, I think. Part of the reason is that the tax regulations on crypto trading in Japan are so severe. Basically, it's just taxed as regular income, so that means it could be taxed as high as 50% depending on your income. So therefore, people are using Metaplanet, which is a stock, which has more favorable tax treatment. They're using that as a proxy for Bitcoin holding. The company is still doing well. They've got a $500 million line of credit, and the most recent story is that they've used another 130 million of that, in addition to 100 million that they had borrowed earlier in the month to purchase more Bitcoin. So they're still expanding their Bitcoin holdings. Currently, just under 31,000 Bitcoin is what they hold, valued at roughly 3.5 billion.
Have you looked at the chart of Metaplanet stockgram lately?
This is going to give me the chart. Yeah, it's been down
Have,
since from a high of what is that?
it looks like a shitcoin chart.
Yeah,
It's
kind of
like,
bouncing a little bit here. It might have found a bottom.
hold on. Oh god. If you look at, yeah, the high was in what? In June, and it's been from the height of
Down about
June.
85%.
Yeah, man. uh,
Yeah,
so
not
I can
ideal.
imagine a lot of investors, and here's the thing: is a lot of these are going to be like, you'd have to imagine a lot of these are like tradfi investors, right? Um, they're not going to be very happy with this. I think this is like your classic, like within crypto, you see this happen where they buy this stuff on any kind of shitcoin chart, and then that's it. They're done with crypto. Game over.
Yeah, yeah.
So, um, not
No, I
ideal.
think I don't know. I think everyone who bought this, thinking that it was a tax advantageous alternative to buying Bitcoin, I think they knew that like they're sitting on unsustainable gains. You'd have to be pretty financially illiterate to not recognize that it went from like it like 100x. Like the price of the stock went up dramatically.
Yeah. Yeah, I mean, I don't know. I wonder. I mean, Jordy Alexander talked about this on uh, not on Steady Labs, but on other podcasts. How like a lot of smart people. I mean, I guess they could just be lying, but they were parading DATs as like a great thing, and but the game, a lot of people, even smart people, didn't understand what the game was, right? And uh, the game favored insiders and people who got in early, like
Yeah,
the classic thing. Well, you know, we talked about this a lot during the whole DAT phase earlier this year, the craze earlier this year about how like what's the game theory behind playing the DATs and all that kind of stuff. So I think to me the DATs now in retrospect you say yeah it was obviously stupid, but even during that time we were talking about like well so how you know is this sustainable, and obviously it's not sustainable, we don't think it's sustainable, but what's how do you play this, and you know when do you get in, and things of that nature. um so anyway, I wonder how many people got burned and are really upset. I'll tell you this: if on X, if you look at like that, if you look at like the people who are the cheerleaders or the frontmen for these DATs, um, you look at their comments, they'll say anything, right? They're like Bitcoin's going to rebound and or whatever it is. It can be and the comments are just filled with haters. He was like, why is your DAT down 90%? Do something, you know, like that. Just like tons and tons of hate every time I see these comments.
yeah,
So I don't know. There are a lot of angry people that are constantly in the comments of these
yeah.
folks.
So yeah, as you say, David, it doesn't. It's sure it leaves a bad taste in a lot of people's mouths, and it may yeah cause further damage to the crypto
Yeah.
space's reputation, which is already in the doghouse.
Yeah. Here's the thing I wonder though is like so I'm looking at Metaplanet, and you can look at even like strategy, for example. again, it has this classic shitcoin that never recovers shape, right? Like it goes like
Yeah.
this, and it goes up like this, and then it's down only forever, right?
Yeah.
Do these DATs ever recover? Or have people smartened up to know that this will never, like, it should just never be so high above the MNAV, you know?
Yeah.
Or
Yeah.
does it recover if like Bitcoin or these crypto assets kind of go parabolic? Maybe that's how it recovers. Like, I mean,
Maybe.
the chart. I just wonder, or
Yeah.
is it?
I think it'll be kind of beta, like leveraged. So if Bitcoin pumps a lot, or Solana or ETH, then the DATs will like 2x, where, like, let's say Bitcoin 2x, or let's say Bitcoin 2x is a DAT will probably like 3 or x or 4x. I think they'll be,
Yeah,
but it'll just be more volatile.
yeah. That makes sense to me. Again, I've told you this though before. I'm just going to say this again. I've never understood the appeal of Bitcoin or passive DATs, and I think all Bitcoin DATs have so far have been passive. But like the ETH, potentially ETH, but really not yet exactly. But ETH and specifically the Solana DAT, I really do think has a lot of value because they're actively managed, as in they have stated that they will strategically sell and buy, right? And so they're going to have people that they're going to buy it when it's low and they're going to sell it when it's high. The easy sounding thing to do, hard to do
Yeah.
in practice, but also they are going to strategically deploy money directly into the ecosystem. So they have
Yeah.
Kyle Samani, who's
Yeah.
like the chairman of BSOL. I do trust that he knows which projects to put some of their money into.
Yeah.
Um, you know what I'm saying? Like, and
Yeah.
it kind of gives you equity like access to his VC firm or his VC
Yeah.
ideas. You know,
No,
so
that's really interesting. So that is enticing, actually.
right?
A DAT like that. Uh, it's I think still, though, the issue is, as an investor, is the timing of it. Like, because even if it's like really well managed, the price of the stock might get overinflated just because people are like the narrative of it.
Yeah, they're
So it all
speculating.
depends
Yeah,
on when you buy the
yeah.
stock.
And for like something like BSOL, for example, again, it's different for like Bitcoin or a lot of these Ethereum DATs. I also think they followed the Bitcoin model, which is very passive, just like buy and it always seems like they're buying at the wrong time. But I think what you would do is if like you're, let's say, this is how I explained it to someone else who was asking me about this, is like, let's, and this is not applicable to me because I'm a crypto poor, but let's say I have $5 million in Solana, right? I think it would be a safe play to, let's say BSOL is at MNAV, or, man, enticingly below MNAV. I'd be like, yeah, I'm going to take, I don't know, 25% to 50% of my soul, my spot soul, and I'll put it in BSOL, at or below MNAV, just to, number one, diversify away from having spot, but also knowing that they're probably going to be better stewards of it than myself, if you believe that the people running it, and of course it's all dependent on that.
Yeah.
Anyway,
All right. So there is possibly a place for these DATs. The industry, the DAT industry, taking a hard hit here. Let's see what happens. Will a phoenix rise from the ashes?
in bits and bits, they use that same analogy,
Yeah,
and
exactly. There's
did
not
you hear
always
that?
a phoenix
Yeah,
in the.
and Austin Campbell. Yeah, Austin Campbell was like, just a reminder. Sometimes it's just ashes.
All right, I think that's a good place to end it, David. Thank you so much, as usual. Very interesting thoughts. Have a great week, everyone. We'll see you later in the week for Token Narratives, which we're going to be doing live on Thursday instead of
Day early.
Friday. So have a great week. Catch you soon.